The recent market pullback has rattled sentiment, but it may be exactly what this rally needed. After months of anxiety around geopolitical tensions and renewed tariff fears, clarity is starting to emerge. With headline risks easing, the macro environment looks far more constructive than it did in April. And according to Fundstrat's Tom Lee, one of Wall Street's most data-driven strategists, this may be setting the stage for a strong rebound, a familiar pattern he calls the most hated V-shaped rally in history. Back in April, markets faced a cascade of uncertainty. Trade tensions surged, volatility spiked, and many investors moved to the sidelines. But Lee pointed to a reliable signal, the VIX dropping below 30 after spiking above 60, as evidence that the worst may be over. Since then, we've seen inflation come in softer than expected, Treasury yields retreating, and growing consensus that the Federal Reserve may be behind the curve, not ahead of it. Lee has emphasized that the economic shocks of the last 5 years, COVID, supply chains, inflation, aggressive rate hikes, and tariffs, have not derailed corporate earnings. That resilience, he argues, justifies a reevaluation of risk and potential upside. In his view, the tariff panic earlier this year was overstated, and now that policymakers are signaling a more measured path forward, investor visibility is improving fast. The takeaway: this isn't just a relief rally, it's a reflection of improving fundamentals, cooling inflation, and renewed policy flexibility. In today's video, we'll break down 3 stocks that are aligned with this macro setup. Each one stands to benefit from a backdrop of falling rates, normalized trade policy, and a more confident consumer and business environment, all key themes in Tom Lee's 2025 outlook. First on the list is Broadcom Inc., ticker symbol AVGO, a company quietly positioning itself at the heart of the AI revolution. Without the sky-high hype surrounding names like Nvidia, while the spotlight is on GPU giants, Broadcom is building a dominant presence behind the scenes, enabling the next wave of AI infrastructure with a powerful blend of custom silicon solutions, chip packaging technology, and enterprise software. Broadcom's strength lies in its dual-engine business model. Its semiconductor division powers AI, data centers, and networking hardware, while its infrastructure software arm, recently boosted by the VMware acquisition, helps enterprise clients manage complexity in the cloud. This combination is increasingly important as tech giants seek to reduce dependence on Nvidia by designing their own AI chips. And here's where Broadcom steps in, providing the packaging and connectivity tools to make those custom chips work at scale. In its latest quarter, Broadcom posted impressive year-over-year growth in both segments. Semiconductors surged 17%, while infrastructure software grew 25%. These are not one-off results. The company is forecasting another strong quarter ahead, driven by 3 major customers expected to deploy over 1 million chips each by 2027, many likely displacing future Nvidia orders. What's exciting is that Broadcom isn't competing with Nvidia in designing AI chips. It's enabling hyperscalers like Amazon and Google to build their own. That's a stickier, more strategic role in the AI ecosystem. With tech giants pouring billions into AI infrastructure, this gives Broadcom a long runway of recurring growth. And with a focus on profitability, the company is maintaining EBITDA margins above 60%, returning capital through dividends and delivering consistent free cash flow. In short, Broadcom may not grab headlines like Nvidia, but its unique positioning at the intersection of AI hardware and software makes it one of the most compelling long-term plays in the space. It's a powerful way to gain exposure to the AI boom without paying bubble-level valuations. Next up is Taiwan Semiconductor Manufacturing Company Limited, ticker symbol TSM, a foundational player in the global semiconductor supply chain and arguably one of the most important companies powering the AI age. While big tech names grab the headlines, it's TSMC quietly manufacturing the world's most advanced chips that make artificial intelligence, smartphones, and high-performance computing possible. What sets TSMC apart is not just its scale, but its relentless pace of innovation. In just a few years, the company has advanced from 5 nanometers to 3 nanometers, and now it's preparing to roll out 2 nanometer chips by 2026, orders already confirmed from Apple and Qualcomm. This level of technological leadership is unmatched in the foundry space and cements TSMC's role as the go-to manufacturer for the most complex chips in the world. While competitors like Intel try to catch up, TSMC continues to pull ahead thanks to its aggressive reinvestment in R&D and engineering talent. TSMC's financial performance reflects this strength. In the first quarter of 2025, the global foundry market grew by 13%, but TSMC's revenue soared by 35% over the same period, highlighting its ability to capture outsized market share. That growth hasn't come at the expense of efficiency either. TSMC consistently demonstrates operating leverage, turning every dollar of revenue into expanding margins and free cash flow. And here's the kicker: while many AI-related stocks are priced for perfection, TSMC still trades at a compelling valuation. Despite a nearly $1 trillion market cap, the company maintains a strong balance sheet, rising free cash flow, and a sustainable, growing dividend. Its 14% dividend growth rate over the past decade makes it especially attractive for investors seeking both long-term appreciation and income. Yes, there are geopolitical risks, especially with TSMC's base in Taiwan, but the strategic importance of its technology makes it a vital partner to the world's biggest tech firms, from Nvidia to Apple. In short, TSMC isn't just riding the AI wave, it's helping build the entire surfboard. Now let's turn to the third stock, Nvidia Corporation, ticker symbol NVDA, a company that, even at all-time highs, continues to defy expectations and redefine what's possible in the AI era. While headlines buzz with insider selling and record-breaking valuations, what often goes underappreciated is just how dominant Nvidia remains in the most transformative tech cycle of our time. At the heart of this story is Nvidia's unmatched position in the AI GPU market. The company is no longer just a chipmaker, it's the engine powering the global AI revolution. Its Blackwell GPU architecture is being adopted at a breakneck pace, with millions of units already shipped and demand outpacing expectations. Behind the scenes, data centers, hyperscalers, sovereign AI initiatives, and emerging AI factories are pouring capital into infrastructure that runs on Nvidia's silicon. The result? Free cash flow has exploded to over $26 billion in a single quarter, and that's just the beginning. What makes Nvidia's momentum truly remarkable is its visibility into future growth. The company is already preparing to follow up Blackwell with Rubin and Rubin Ultra GPUs, launching in 2026 and 2027, respectively. This annual cadence of innovation isn't just about keeping up, it's about staying years ahead of competitors. Nvidia's product roadmap, combined with its role in fueling trillion-dollar AI infrastructure investments, positions it as the backbone of the next digital economy. Some analysts are sounding alarms about valuation, but consider this: Nvidia's free cash flow margins are hovering around 50%, and many believe it could sustain or even expand those levels as CapEx spending in AI continues to accelerate. With sovereign AI initiatives and custom LLM factories ramping globally, Nvidia's chips aren't a luxury, they're a necessity. In short, Nvidia isn't just participating in the AI boom, it's driving it. And while others may catch up in headlines, the fundamentals speak louder. This is a company riding the most powerful technology wave in decades, and it's still building speed. As we wrap up, it's clear that we're standing at the front end of a multi-year AI infrastructure boom, and the companies positioned at the core of this transformation are already showing remarkable momentum. From Broadcom's deep integration with hyperscalers, to TSMC's unmatched innovation in advanced chip manufacturing, and Nvidia's domination of AI compute, the opportunity is massive and still unfolding. Tom Lee calls this a V-shaped recovery that nobody believes in, but the data doesn't lie. CapEx is surging, demand is real, and these businesses are executing. While risks remain, the long-term thesis for AI infrastructure has never looked stronger. If you're watching markets for the next megatrend, this could be it. Don't forget to like, subscribe, and stay tuned as we continue covering the companies and catalysts shaping the future of technology and investing.